this morning? Good morning, Steve. Good morning, Andy. Good to see you guys in here today. How's everyone feeling? You ready? Finally, the weekend's over. We can be day traders again, right? Finally. Gonna be a good day. Good morning, George T. Mr. Paul, it's nice to see you back in here. Other Mr. Paul, nice to have you in here. Guys, welcome to the room. Welcome to the beginning of your journey, I think is the best way to think of it, guys. This is where you're going to learn the basics. This is where you're going to learn to read indicators. This is where you're going to learn to recognize advantages. And everything that you get in this classroom, you're going to take with you on your learning journey. So I'm pretty stoked about it. It was funny. I woke up this morning. Good morning, Derek. It's good to see you back in here. Oh, can you guys hear me? Give me a Y if you can hear me. Anybody? Yes? Okay. Let's let Derek know. D-R-E-K. All right, there we go. Good morning, John. John went from gastrointestinal to good morning. I like it. Nice adjustment there. Hopefully we can get Derek restarted back where we're going. That's okay. I do not take off for misspellings in this room. We're all typing frantically. I do it myself. Guys, check-in news. Hey, Mike, good to see you. Forexfactory.com/calendar. So I'm going to let everybody in on a secret here that's new to trading. Trading is about patterns. Trading is about the market doing the same thing over and over. Trading is about learning how to recognize a pattern, being able to prove that that pattern wins more than it loses, and then committing to that pattern like your financial life depends on it. So one of the things that can upset patterns is news. Because there can be an emotional response. There can be a pre-planned response from the people that control the market. And every morning I stop off at forexfactory.com and I just check news. I look to see what's going on. So Monday, August 18th at 10 a.m., we've got some housing market index, guys, and they're saying that it's going to be low impact. That's what the yellow box means. So for me, I'm not even going to worry about it. I'm just going to go on with my life and do what I do. Nothing high impact until 2 p.m. on Wednesday. You good now, Derek? Awesome. So we're just going to focus on patterns and how to trade them and how to get in and how to get out and how to manage and how to give yourself the highest chance of success. So let's close that bad boy down. And this morning we have two groups in this room, which is pretty cool, I think. We have the Ninja Trader group, and you guys are using dynamic Renko bars, and you will see Fibonacci on your chart. We also have the Trading View crew, and you guys will be using minute bars. And the rules for each platform are very similar, but there are subtle differences. So I want to make sure if you're one of my Ninja Trader people, you're going to notice that you have the dynamic Renko bars. If you are one of my Trading View people, you're going to notice that it looks a little different. You're going to have minute bars. So I've already dropped in the room a plan for each of you. So if you are Ninja Trader, your focus this morning will be the KISS plan. And the KISS plan is just a way to optimize your chances of success. It gives you the absolute best trade. And guys, I put some links to pictures, what it means to have the rules met inside of a KISS plan for you. This very basic trade is going to teach you to read your indicators. You're going to find out that reading your indicators is about 90% of your day. 10% of your day will be spent actively trading. This covers entry for the best of the best trade. This covers management for that same entry. It also takes you on to what we call a medium probability trade and gives you a way to manage it. So if you're the brand new user, I will give you everything you need to be successful with the software. If you're in TradingView, I'm giving you the same type of plan, telling you exactly where you're going to find your advantages, how to read your charts, and then looking for entries. So both of these have already been dropped in the room, guys. Scroll up, you're going to see them. And what we're going to do this morning is we're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. When I say when it's okay to trade, what I'm saying is when the rules are met. When you have an advantage, when you have an edge, when you're recognizing a pattern that you can prove wins more than it loses, that's when it's time to enter the market. And if you don't see that recipe for the perfect trade, guys, this is the high probability trend trade. If you don't see momentum through your chart reading, strong triggers, if you don't see a clear path, and if you can't define an entry area, it's okay to do nothing. It's all right to not be in the market. The market is, and you'll find that I use really horrible analogies all the time. I feel like the market is a buffet, guys. And you can go to a buffet. If you've ever been to a Vegas buffet, they're 73 miles long, guys. And you will never be able to eat everything on that buffet. You will never be able to drain the buffet of everything that it offers. Trading is very much the same way, guys. You're never going to catch every tick. You don't have to catch every tick in order to be happy and satisfied and wealthy, but you can catch the best. You can catch your favorites, and you can walk away in a market that trades billions, having made $400 to $500 a day, putting yourself in a six-figure income based on that trading. So when we talk about the trades for the new user, we're going to talk about trades that have momentum on their side. We're going to talk about trades where there's nothing in the way, and we're going to talk about a trade where you have a checklist to define your entry to make sure that you have that advantage, guys. And that's what the classroom is. The first hour is a little lecture-y. I understand that, but please, please, please interrupt me if you need to. Everybody in the room has the ability to simulate. You can all practice. This is the batting cages, guys. This is the driving range. This is where it's safe to make mistakes. This is where it's okay to break the rules. But when you simulate, when you practice, guys, take pictures of your charts and go back to what you saw. Tell me what you saw on the chart. Tell me why you did what you did. And what happens is it's like this private session. You and I will go back to the very basics, momentum, path, and entry, and I'll give you feedback on anything and everything that you drop in this room. And that feedback is going to recognize what you did great. We will high five. There will be gold stars handed out. Everybody will be happy for you. But I'm going to tell you right now, you will make mistakes, guys. I still make mistakes. Mistakes are okay. Mistakes are the most important part of learning to trade, because when you make a mistake, together we learn how to overcome that mistake. And that's what I really want you to feel safe doing. Post in the room. Tell me what you saw, and be willing to take the lesson that goes with it. The plans that I've handed are very simple. They're not in depth. None of the checklists have more than 3 things on them. You need to learn what looks you're going to commit to, and learn those looks so that they become easy. That's kind of the second piece of the puzzle to getting to where you want to be. I'm going to drop in the room spreadsheets for both platforms. One is the Nexgen trade tracking sheet. That's for NinjaTrader. The other is the TV Trade Journal. That's going to be for my TradingView people. And in these spreadsheets are just a ton of pictures, guys. The trades that are on the plan, ideas on management, when to stop trading. And then there's a trade tracking journal on the back page. For NinjaTrader, it's the 3 basic rules that get you into a trade, what it looks like to have them met, what it looks like when they are not met. There's over 500 pictures of Nexgen users having presented in the room that they were so outstanding. I took the picture and I dropped it into here as a study guide. And here's the cool thing, and I think this surprises a lot of people, is you'll see a couple links that say perfect trade didn't work. Guys, I've never met a 100% day trader in my life. I've never met anybody that doesn't take losses daily. And the idea is that you are in control of everything. And you can take the correct losses. You can take the losses that had the advantage, because on NinjaTrader, when you have momentum, path, and entry, guys, and we're going to break these down individually, you're looking at a pattern that you can prove typically wins up to 70 to 80% of the time. And what that means from a mathematical standpoint is that anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. Losers are not a defeat. Losers don't mean necessarily that you did something wrong. Losers are a normal part of a positive equity curve, but you can be in control of whether or not you have an edge when you take that trade. So momentum, path, and entry are what we're going to talk about. You're going to be able to look at your charts, whichever platform, and you're going to say, this is the good stuff. This is high probability. This is when every indicator agrees with the rules for the trade. Life is outstanding, and I can't wait to take that trade. You're also going to be able to look at your chart, and you'll recognize if one of those advantages goes away. Doesn't necessarily mean that there isn't a trade. It's going to put you into a medium probability scenario, and these are the trades that have to be managed a little more assertively, little quicker profits, a little faster to go to break even, because they're not perfect. You'll also be able to look at your chart and say, man, I don't have 2 out of 3. I don't have 3 out of 3. I'm cool just sitting on my hands doing nothing, because 90% of my day is doing nothing. And the only thing you guys are ever in control of is whether or not the rules are met, whether or not you enter the market. Knowing what's working for you and against you is going to help you make decisions, not only on whether or not you're willing to entry, but also how assertively, how aggressively you may need to manage that trade based on the absence of advantages. So we're going to go through and we're going to talk high probability. We're going to look at 3 rules, and we're going to look at them on NinjaTrader first, and then we'll go back and we'll do the chart read for TradingView. But both platforms have triggers, guys, and what you're going to find is that 95% of the indicators are exactly the same. How we read them is what's a little different. So big charts, little charts, all charts will have triggers. There are small triggers, 2 solid lines on NinjaTrader, large triggers, 2 dashed lines, guys. Your small triggers are a fast-moving average. Your large triggers are a slow-moving average. On NinjaTrader, triggers will define the advantage of momentum through rule number 1. Triggers will define whether or not you're trading into trouble for rule number 2. Triggers, specifically large triggers, will define amazing entries, precise entries for rule number 3. Both charts, NinjaTrader, also have areas. Now, areas are horizontal lines for the most part that run across a chart. There are divergence highs. So divergence means loss of momentum. Andy V, little language lesson for you here. Divergence comes from a pivot, and it means that there was a loss of momentum right at that key number. The market was pushing up, couldn't go any further. When it came down, if momentum was lost, you'll see a negative number and that magenta line. And a magenta line is what it's going to look like from a high. If the market is pushing down and it loses momentum, you're going to see a negative number and a cyan line coming from a low. So divergence is a loss of momentum, and that's important because momentum is one of our advantages. You're going to see red Fibonacci resistance. These are Fibonacci areas. These are based on tens of thousands of calculations. You'll see them as a solid red line. When the market is moving up, this is an area that could stop the market. This is an area that could cause an untradeable bounce. This is an area that could create a ricochet, if you will. When the market is trending down, support behaves the exact same way. Support lines will be blue, resistance lines will be red. You're going to see yellow 1-to-1s, guys, and these yellow 1-to-1s are fibs that print in the moment. If the market is trending up, they will behave as resistance, or can. If the market is trending down, they can behave as support. Then finally, you're going to see this moving average. It's just a mid-band, and it's going to run through the middle of your screen. If price is above that mid-band, it will turn green. It may behave as support if your rules are met. If price is below it, it'll turn magenta. It may behave as resistance if the rules are met, guys. So areas and triggers. That's all we're working with here, areas and triggers. And we're going to use those indicators to recognize three rules to get you into the highest probability trend trading. Now, if you are on TradingView, you will still have triggers. You will still have every area with the exception of Fibonacci. Shouldn't be long. I think he's expecting the end of this week, hopefully. But until then, you can use zones, supply and demand zones, guys. So zones above you can behave as resistance. Zones below you, there it is right there, can behave as support. So that's really the only difference between the indicators that you're going to see on the charts. Now, we're going to talk about the NinjaTrader chart read first, and we're going to go through these three rules. Guys, I want you to interrupt me if you have a question. Rule number one says that the large chart must have strong trigger lines. Strong trigger lines provide the advantage of momentum. This is the recognition that we're striving to find. Strong triggers have nothing to do with Fibonacci. Strong triggers on NinjaTrader has nothing to do with price bars. Strong triggers simply means that in an uptrend, when your NinjaTrader background is green on the large chart, small triggers are above the large triggers. Large triggers will be wide, and there will be space between the two. It looks like scissors that are open. In a downtrend, small triggers will be red, large triggers will be red, and small triggers will be below, and space will be created between the two. So strong triggers is universal, large chart or small chart. Momentum is always momentum, and momentum goes away when your small triggers work their way back inside of the large triggers. I try to keep this very black and white. I try to keep this very simple, guys. You either have momentum as a brand new user or you do not. Either the odds are favorable for the market to continue in the direction of the trend, or it is weakness, and anything can happen up or down. So when we talk about momentum, let's go to a large chart. You'll be able to recognize momentum on the large chart on the very first, most current bar. Can you give me a Y in the room if you see that the smalls are above the large and that there is space between those trigger lines, guys? This is your look of momentum. Momentum is only the first rule. Sometimes it's there. Sometimes your colors don't agree. Sometimes it's weakness. But your best of the best look will always be that separation between the small and large. This is a large chart advantage. Momentum is defined on your bigger, slower chart. And I skipped this, and I apologize. It is Monday. Large chart will lead the way when we're talking about these rules, guys. Large chart is going to define direction through background color. Large chart is going to define momentum based on those strong trigger lines. Large chart is going to define areas that can be problematic. That's going to be rule number two, making sure we have a clear path. Your small chart, your fast chart, is nothing more than an entry chart. It's a way to manage. So when the rules are met on the large chart, that's when you go to the small chart. Excuse me. I'm going to share this real quick. This is why. And it doesn't matter if you're NinjaTrader or if you are TradingView. Guys, the large chart is the overall opinion of the market. The large chart is controlled by the people in charge of the movement, creating the trends, establishing the momentum. The large chart typically wins. So it's going to be easiest on you if you just don't fight it. Your small chart is where the fighters show up, guys. And the small chart will show tiny little movements inside of that one bar that's giving you all those advantages. This is how you're going to be able to pinpoint your entry with rule number three. This is how you'll be able to reduce risk. This is how you'll be able to maximize profit potential. So we're going to use the two charts, and everything starts on the large chart. And we've just defined momentum. That look that says, hey, the market is most likely to continue in the direction of the trend. And now we've got to make sure that there is nothing in the way, that we don't have something that could create a bounce. Horizontal lines on the large chart, ladies and gentlemen. Horizontal lines are where that big crowd is making decisions, where buyers buy, where sellers sell, where fights happen. So in order to define a termination condition, we're going to let the big crowd get there. We're going to let your price bars reach an area on the large chart. Guys, this is the first step in defining a termination. When price reaches an area, your trigger lines will tell you everything that you need to know about that area. So once price reaches, we abandon price and we go to the trigger lines, large and small. If 1, 2, 3, 4, none of your trigger lines get above that area, does everybody see that we're looking at these yellow 1-to-1s? Price reaches it and we start counting triggers. If no triggers make it beyond that area is a termination condition. That area could stop the market. That area could create a reversal. That area could create a bounce that you would never survive if you took a long trade. That area could also break. Now here's one of the bummers about trading that I didn't want to accept. You'll never know what the reaction's going to be, guys. You'll never know if it's going to stop the market or if it's going to break. Your highest chance of success comes from not taking a trade into that area if it's behaving as a termination condition. Now, if it's going to reverse and bounce, it's going to look like this guy right here. Price reached the 1-to-1s, 4 triggers below, and look at the giant ricochet down. If it's going to break, it's going to start with your small triggers getting above that area. So if 2 trigger lines make it above the area, if it was just a termination, this area has the potential to break. But it's only potential. Potential is not a clear path. Potential is not a 3 rules met, best of the best, high probability trend trade. So that potential with only 2 triggers, it's a little iffy. It's a little less likely to break. This is when the areas, even though the trigger lines get above, they're more likely to hold. When 3 of your trigger lines, both small and 1 large, get above the area in question, now that breakout is more likely to happen. Now that breakout potential is higher, but it's still only potential, guys, and that is imperative that you say to yourself, this only has the potential to break. It's not a clear path yet. It will not be a clear path until all 4 trigger lines get above the area. Then an area of resistance will begin to behave as support. Then the path is clear, and your path will actually remain clear until you reach the next area. So if I'm reading my charts and I say I have the advantage of momentum, but only 2 or 3 trigger lines are through my area, I have to say this is not a clear path. This is now a medium probability scenario. Let's go back and once again just look. Most current bar, guys, what do you think? Strong triggers, smalls above the large, space between. Does everybody see it? Let's stop this market real quick. Price reached a divergence high, a horizontal line on my large chart. Triggers have not broken, ladies and gentlemen. This is what we call a termination condition. This is an area that could in fact stop the market, that could create an untradeable bounce, that could create a reversal. How do I know? How do I build trust in this rule, guys? I want you to see something. Here, price reached a fib. None of the triggers broke. And look at the retracement. Here, price reached a divergence low. None of the triggers broke. Look at the retracement. The same is true over here on this one. It's not the one time that the market breaks when you're looking at it, guys. It is the 60 to 70% of the time. This look removes your advantage and pulls money out of your account. Can you give me a why if you're with me? There it is again, and there it is again. And the reversal came from resistance with no triggers through. And the move up came with only 2 triggers through that pushed up. And here 4 triggers get below support, and look how the market comes back. And it behaves as resistance with 4 triggers below and continues the move down. Guys, some people will tell you you cannot predict what the market is going to do. I say you can know the most likely outcome if you learn to follow a couple simple rules, guys. If you learn to count triggers every time price reaches an area. That's rule number 2. Rule number 2, rule number 1, these are large chart advantages. These are big picture advantages. These are slow chart advantages. This is the overall opinion of the market, giving you the highest probability chance of success so you can go define an entry. If your rules are met on the large chart, if you have strong triggers, if you have a clear path, and let's go back one more time. If you have strong triggers and, not or, but and a clear path, then it's time to go to rule number 3. Currently, that's not what we're looking at, but if we had it, we would say on our smaller chart, on our faster chart, the precision is there, guys, so much so that you're going to use a limit order. You're going to wait for the market to come to you. You're going to let the small crowd fight and create a little pullback. That tiny move down counter to everything the large crowd wants. And you're going to buy or sell that pullback at an area, at a fib, at a mid-band, at a yellow 1-to-1, because the same way these areas can stop forward progress on the large chart, they can create that bounce in the direction of the large chart. But the key is you want those areas to be inside of triggers. Trigger lines define the retracement zone, guys. Moving averages are all triggers are. And there is a mathematical term called the regression of the mean that says when price moves away from the moving average, it typically pulls back. And if price moves away from the moving average, it typically pulls back. We're going to use that concept. We're going to use that little mathematical anomaly to define the perfect entry. And we're going to use a limit order. You're going to use a limit order to buy or sell a pullback at an area inside of triggers. And it's going to look like this. You're going to buy the pullback right at an area, fibs, mid-bands, yellow 1-to-1s, and those areas are going to be inside of those trigger lines. Your small chart will have large triggers. They're solid, they're smooth. You can compare them to the small to define momentum. And then they're also going to have synthetic triggers. These have steps on them. These are nothing more than the large triggers from the large chart. You're putting your retracement area on the same chart where you're defining entry. So there's a look that we call favorable large triggers. When you're large and synthetic are overlapping one on top of each other, guys, it is the smallest range for the retracement. And then when you put a fib, a midband, or yellow 1-to-1 in there, it is the highest accuracy for entry. So when we're looking for an entry, let's go and we'll do a long entry and a short entry. And we'll go through it step by step, how you can define precisely where the market is most likely to continue. When the large chart rules are met, you're going to go to the smaller, faster chart. Your smaller, faster chart says wait for the reversal bar, wait for the pullback. And guys, you are going to be miserable waiting for that pullback as a brand new user, because you're going to see the large chart going up. You're going to see the momentum. You're going to recognize the clear path, and it's going to look like you're never going to get paid. And then that reversal bar begins. This is the beginning of your entry pattern. Once the reversal bar prints, or with a little bit of experience even before it prints, you're going to look at your triggers, large and synthetic, and you're going to say, okay, if they push down, they're most likely to go somewhere from the top of those triggers to the bottom of the triggers. That's your retracement zone. And you're going to remind yourself, triggers are not my entry. My entry comes from an area within, fibs, mid-bands, or yellow 1-to-1s. I've got a mid-band closest to the reversal bar. I've got yellow 1-to-1s still in the retracement zone furthest from the reversal bar. This is your window, ladies and gentlemen, your window of opportunity, if you will. Sometimes it'll be a couple ticks, sometimes it'll be a couple points. But somewhere within this shaded area is where the market is most likely to bounce and continue with all of your large chart advantages. Does that make sense, everybody? When the large chart is up, when the large chart is strong, we're going to wait for a reversal bar on the small chart. We're going to define where it's most likely to bounce using areas inside of triggers. And because of the large chart advantages, your job is going to be to activate a limit order at that highest point of support and hope that the small crowd comes and gets you, guys. This is your entry for the high probability trend trading. Any lines, any fibs, any mid-bands, any yellow 1-to-1s on the wrong side of those trigger lines, below those trigger lines, this is where the advantage of rule number 3 is no longer in play. Entries are not from below the trigger lines for long trend trades. And short trend trades, there it is. Large chart rules are met. Wait for the reversal bar. define where the market is most likely to retrace using large and synthetic triggers, define where it is most likely to bounce using an area inside of those triggers, inside of that retracement range. Activate your limit order below the lowest area, closest to the reversal bar, because we're not going to fight all that momentum. We don't expect the small crowd to get that far. This becomes your entry for the highest probability trend trade. Any line on the other side of the triggers, beyond those triggers, is where the advantage is no longer in play, guys. An entry's taken from above the triggers. You don't know if, when, or where that market is going to stop, if it's going to bounce, if it's going to continue down. So your ability, and you will have that ability to pinpoint precisely where the market is most likely to continue, what that does for you is it also defines where the market should not go if this is going to be part of that 70 to 80%. That's where your initial stops will be placed. You're going to have that in the management plan, in the KISS plan. Stops are placed where the market should not go, about 5 ticks beyond those trigger lines. And what you're going to notice is that very often these successful trades don't make it more than 3 or 4 ticks beyond the triggers. Why the number is 5. And then when they go in the direction of the trade and produce that reversal bar, you'll be able to reduce risk even further. And guys, that's your high probability trend trade. First, it's momentum. Then you have to define your path. And this path is not clear. So even though it pulled back to the area inside of triggers, it simply has nowhere to go. And you can see this is that fight. This is that fluctuation inside of one bar on a large chart. We're already seeing about 25 bars. Can you guys give me a why if you're with me? When you have momentum and at least the potential to break, you're going to see these tails print on a small chart. If we're going back historically, let's see what that tail looks like on a smaller, faster chart. Scrolling. That's your pullback. Didn't make it to the area inside of triggers. But guys, that's how you can go back and study this pattern. If the rules are met on the large chart, strong triggers, at least the potential to break. On the small chart, very often, if it continues with the trend, you're going to see that pullback, you're going to see that bounce, and you're going to see that continuation. Guys, this is how you can study that high probability trend trade without ever having to take a trade. Scroll back. Your software goes back 10 days. Every time you see a tail with the rules met, every time you see a tail, when you have momentum, when you have the potential to break or a clear path, circle the tail. Scroll back on your small chart. There it is right there. There's your pullback to an area inside of triggers. Does everybody see it? That is the high probability trend trade, guys. That is the best of the best. That's the one that teaches you to recognize advantages. That's the one that teaches you to trust that the large chart leads the way. That's the one that's going to keep you from trading directly into areas on the large chart because you know they can stop the market. But if you can find a pullback to an area inside of triggers to get you to trouble, those are going to be the easiest trades that you ever take. Guys, this is the same thing every morning. We talk about momentum, we discuss path, and then we define entry. That's your high probability trend trade on NinjaTrader. Let's go to TradingView now. And then, guys, the rest of the classroom is going to be your charts, your questions, feedback on everything that you do. So TradingView is also 2 charts. There is the big chart, the overall opinion of the market. There is the small chart, the refinement process. The difference is the large chart on TradingView is a 15-minute chart, guys. It is a huge chart. It is a slow chart. It is a very difficult to see change chart, and there is a lot that can happen. There's your market open. Look at the 1 bar, all the way up to trouble, all the way back down. It's super slow. So in order to read your large chart, and we've got some new TradingView people in here, right? It's a three-part process, and we're going to learn to ignore the large triggers on the large chart, guys. The first thing you're going to do is you're going to ask yourself, what direction are the small triggers going? Does everybody see that my small triggers are angled down? They're pushing down. The direction is down. Everything says down. Welcome to the room, TV. It's great to have you. Are you on NinjaTrader or are you on TradingView? I've got both in the room, so that's why I cover both. TradingView, awesome. So here's your large chart read. Everything starts with these small triggers. What direction are they going? Does everybody see that the small triggers are down? So my path of least resistance is to simply go down with them to look for short trades. Nobody saw it? One person saw it. Awesome. Once I see that the small triggers are down, I'm going to ask, where is the current price trading in relation to the triggers? Had a great talk with a buddy on Friday. He goes, Mark, look at the bar, how big it is. Some of it's inside, some of it's below, hell, some of it might even be above. So guys, you're going to ask yourself, where is the most current price, the highlighted price, 64, 67, 25? If it is left of the triggers, you're on the strong side of the triggers. This is the equivalent of NinjaTrader odds favorable momentum. This is where 1 minute areas are most likely to break. This is the super strength that you're looking for in a move. If the current price is inside, nestled inside of those triggers, you're in that transition phase. You want to be aware of 1 minute trouble. You want to be ready to manage at a 1 minute problem. And if you are left of those small triggers, right of those small triggers, number 3, this is the weak side. I'm still only looking for short trades, but I really want to make sure that on my entry chart there's nothing directly in my way, because this is when small chart areas are more likely to create big ugly bounces. So first it's direction, then it's location, and then finally I'm going to say, is there anything in my way? Do I have room to get to trouble? Do I have room to get to one-to-ones, to an outer band, to a zone, to a divergence low? And if I do, well, then I'm going to go to my small chart, my 1 minute chart. And my 1 minute chart is going to be an entry chart. In that entry, I'm going to steal a couple pictures from the spreadsheet here. There are 2 types of entries that are going to happen on a small chart. When you're trading with the direction of the smalls, knowing which side of the triggers you're on, and with room to a target. Is everybody with me so far? This is your large chart read. And guys, this picture is in the TradingView plan that I gave you. There are 2 types of entries, guys. There's the trend trade entry look. And the trend trade entry look means that price pulled back to an area, price pulled back to a mid-band, that you got above everything. And as price pulls back, the one thing that you'll notice on your 1 minute, on your entry chart, is that those small triggers, that faster moving average, has turned against the trade, guys. Can you give me a Y in the room if you see that the small triggers are no longer up, but rather they have turned down as we look for this long trade? This is going to be important for entries. When the small triggers turn against you, ladies and gentlemen, your highest chance of success comes from not fighting those triggers. Let it pull back to the area. Let it pull back to the mid-band. Let it pull back to the one-to-ones, but enter with a close on the correct side of the trade, of the small triggers. And it's okay. You're going to have a little risk, and if it's too much risk, it's all right to skip it. But guys, this is your highest chance of success. This is what you're going to use for the trend trades. Now there's another look for entry. When the large chart says down fast, there's nothing in the way, you're going to see momentum trade entries. And this is where that NinjaTrader lesson, that separation between the small and large, letting you know that the momentum is present, is going to pay dividends. Because with strong triggers, if price breaks below the area that was behaving as support, it becomes resistance. And when it pulls back to that area, you're going to sell it with a limit order as long as you have strong triggers. If you no longer have strong triggers, you're going to go to the trend trade entry. So guys, there are two types of entries that are going to happen on that chart. And it's all in the plan. How to read. Entries are taken from mid bands for trend trades, HVA lines from terminations, HVA lines, zones, areas for those momentum style trades. There's your trend trade look. There's your momentum trade look. Guys, there are checklists for entry, and I even added pictures of what they look like. So the 15-minute for the trend trade cannot be trading directly into an area. So when you come back to the picture, it means that you're going to have room to your targets. The 1 minute cannot be trading directly into an area. You need a little room. You got to have room to make money. And then finally, you're going to buy or sell a close on the correct side of triggers on the 1 minute. So this is a trend trade short entry. You can see how the market pulls back to the mid-band. The small triggers are against it, so your entry is the close on the correct side. Can you guys give me a why if that makes sense? This will be your trend trade entry. Price reaches the mid-band. Don't fight the small triggers. 1, 2, 3 bars. When you finally get a close below, that's when the market heads back down with the large chart. Now, where do I put my stop if I take this trade, Jen? Above the pivot from the area that gets me in. So that's going to be your first stop placement. And guys, if it's a trend trade and you're following that trend trade all the way to the large chart areas, when the market comes down, forms another pivot, move your stop in the direction of the trade. And the market comes down, forms another pivot, move your stop behind it in the direction of the trade. So that's one of the ways that you can use stop placement as the market is in that big move. Does everybody notice that after the trend trade, with strong triggers, it's a pullback right to the HVA line? That's your momentum trade. So the trend trade gets things started, and there's momentum trades along the way. When the rules are met for the momentum trade, move your stops, guys. It's like a brand new trade in there. What a great way to protect profits. And now for a long entry. Price pulls back all the way to the mid-band. There's your close on the correct side. It's with this close, stop will go behind the pivot. Guys, there's room to go up and make money. So that's your trend trade look. If you go to the plan, here's your HVA trade look, guys. Zone reached on the 15 minutes. So when you reach trouble, it's not the end of trading. We may be able to look the other direction. If the 1 minute small triggers turn, you can buy or sell the pullback to the HVA. And we're just going to go through and watch the live market, guys. But first, your zone is reached on the large chart. We saw a lot of this in NASDAQ this morning. Your small triggers get above the large triggers on your small chart. Does everybody see how the market pulls back to that green line? That green line is your HVA line. That's your buy. That's how you're going to take advantage of the market reaching areas. And sure enough, it rockets up all the way to the next range of trouble. And then finally, there's going to be those momentum trades. And the momentum entries, strong side of the triggers, nothing in the way, let the market break the area, break away, and then pull back to the area. And this becomes your buy. You can take it all the way up to trouble, guys. So whether you are a Ninja Trader or whether you are TradingView, guys, there is a way to find success, and it all begins with learning the looks, learning the patterns, study the patterns, use the checklist. This is the first half of class. We do this all day long. I give you the plans, I give you the checklists, I give you everything that you need to be successful with the software. If you want to get there the fastest, post in my room, guys. Every time you post in my room, if you're on NinjaTrader, talk about momentum, terminations, and entry. And what you're doing is you're saying, hey, Mark, this is how I read my charts. This is how I read my indicators. Did I do it correctly? And guys, no is an okay answer in the beginning. You're learning. Give yourself some grace. This is where I entered. Did I follow the rules? I feel like I did, but I want that second opinion. Guys, a lot of times you're going to get high fives. Great job. That's it. Get it in your spreadsheet. Put it in that trade tracking sheet. And put the feedback. That was perfect. It goes in the plan. Sometimes, and I did this a lot, you might trade without momentum. And we'll go back and we'll do a lesson on momentum. Sometimes you'll trade into a termination. We'll go back and we'll do a lesson on termination. Sometimes you jump in instead of waiting for the pullback. Guys, your spreadsheet, your trade tracking sheet has a place for feedback. I'm going to tell you exactly what your challenge was. I'm also going to tell you exactly how to fix it. That's the key right there, knowing what you did wrong and then having a way to fix it. So the tracking sheet, no matter which platform you're using, go back and study your trades from yesterday. What worked? What didn't work? What was the feedback? How do I fix it? What am I going to focus on? And that's going to set you up for the day, and it will accelerate learning. So take a lot of pictures, drop them in the room. Keep it simple in the beginning, guys. There is one recipe for the perfect trade. And then from that recipe, you're going to find all the trades. You're going to see all the opportunities. So when you post in the room, we're going to go through your chart. So I'm going to start with Andy V's. He's my first one today. And Andy V says, whoops, hold on, let's get your other one too, because that one doesn't reference momentum or anything. Andy says, check it out. I have odds favorable momentum. I have 3 triggers through the area, and I'm going to enter on the pullback at 62.30, right at the area inside of triggers. So Andy, what you have, and this is an important part of it, and I'm going to go back to this, guys. We're going to do this a little bit today. I'm going to go back to that perfect recipe. You had momentum without question. You had an area inside of triggers. I can't argue that. Andy, let me know that because 4 triggers weren't through the area, that you realize you're not working with a clear path. Does that make sense, everybody? First, it is separation between the small and large. It has nothing to do with Fibonacci. Then it's counting triggers. Andy had 1, 2, actually you had 2 trigger lines through the areas, not 3. So it's the potential to break. Is everybody with me? Can you give me a Y? Can you hear me? Guys, Y's and ends in the room are going to save your bacon long term because it lets me know whether or not you need to go in on the lesson. So when we have momentum, he has the potential to break, and he has a clearly defined area. Guys, when you go through and you do this read, what it does is it says, okay, I need to embrace momentum. I need to make sure I'm not sacrificing momentum. And I want to make sure that my entry area is solid, that I can manage my risk. That's all this read is. It doesn't say don't take the trade. It says know what you're up against so you know how to manage. Now, Andy, this is where this trade started to go south. Divergence prints. Guys, divergence is a loss of momentum. Does that make sense, everybody? Divergence is a visual that momentum is dying in a trade. So you lost mom, and you're looking at less than optimal momentum now, and it's only the potential. Guys, divergence is the #1 killer of the potential to break. It really is. It doesn't necessarily mean that it's not going to work out, but if you recognize that divergence, get your management hat on. Now what happened is you took the perfect entry. Oh, I'm getting there. I'm setting it up, Andy. I am leading the witness, my friend. Your stop was perfect. The market continues down, and then a second divergence prints, right? A second divergence prints. So when the second divergence printed, you're working with an entry area. Does that make sense, everybody? 2 divergences in this trade. is even more detrimental to the potential to break. And Andy, you exited maybe a little bit late. You guys will know about divergence halfway through the third bar, right there at 62.36. And when it prints, it's okay to hit the close button. It's okay to say, you know what, I'll give up 2 or 3 ticks and I'll wait for the next best trade. Andy, it is the perfect reason to take an outstanding entry and just a little opportunity for management. That's it. Great job. Absolutely wonderful job. Thank you for sharing that in the room. And guys, this is what we're going to do for the rest of the day. We're going to look at the charts that you guys present. We're going to talk about the advantages. We're going to go to the live market and we're going to say things like, my small triggers are up. Price is in the transition side of the small triggers. And I have 3 tiny little points to get to something that could stop the market. Can you give me a why? Up, transition. I just don't have room to targets, guys. Which means I'm not looking for an entry. Crude oil. Smalls are down. Again, transition side of smalls. Does everybody see the zone? 4 ticks in the distance. I don't have room for profits. I don't have anywhere to go. There's nowhere to go to make money. And look at what the 1 minute chart is doing. I'm just not looking for the short trade, guys. My next trade will be if I get an HVA somewhere above this zone. Maybe we'll look for an opportunity to go long from the termination condition. Oh, I don't have a gold chart. Here's the S&P. Smalls are up. Strong side of the smalls. And then once again, I just don't have anywhere to go. I've got an area right in the way. You can even see on the 1 minute chart how it's creating a bounce. Does everybody see it? No reason to trade into that area. And guys, 90% of your day, 90% of your day is doing nothing. 90% of your day is waiting for advantages. Strong triggers, 2 triggers through, divergence print it, and look at how far down the market pushes with only the potential to break. Avoidable loss. Now, does everybody see the most current bar? Smalls are inside of the large. Do you recognize this as not your best momentum look? Because momentum is the separation. NinjaTrader users, give me a Y if you see it. I don't have the momentum that I need to feel like this is a market that's going to push in the direction of the trend. I did have a clear path, and I did have an entry area. But without rule number 1 met, does everybody see what the market is currently doing from the wrong side of those triggers? This is also an avoidable loss. There's no reason to take that long, hoping that without momentum, it pushes in the direction of the trend. Whoops, that is NASDAQ. This is crude oil. Weak triggers, right at an area, and look at the retracement, ladies and gentlemen. This fib is our problem spot. We have momentum, but we're not quite to the potential to break. Are you guys with me? It's a really quiet class today. Am I moving too quickly? Pull back to the area inside of triggers with the potential to break. Pull back to the area inside of triggers with the potential to break. Does everybody see it? With the potential to break. Hold on. Pull back to the area inside of triggers. Second divergence kills it. Guys, it is literally the same thing every day. First it's momentum, then it's counting triggers, and if your rules are met, it's defining an entry at an area inside of triggers over and over and over. Rinse and repeat, guys. And the cool thing is is that when you understand the basics, when you can identify a high probability trend trade, guys, what you've done is not only just identified a high probability trend trade entry, it means that you know where the advantages are met. It means that you can, without hesitation, recognize the advantage of momentum wherever it shows up in your day. It means that you have a clear recipe for knowing when you should pump the brakes, when you should be patient, when you don't have that advantage of a clear path. But it means that you also recognize when the path is clear and when that advantage is present. And then finally, it means that you can define where the market is most likely to bounce and continue with the direction of the trade. And once you get these very basic concepts down, guys, you begin to see more. You begin to see more opportunity. You begin to see more entries. You begin to find more aggressive ways to manage. And you begin to see patterns that repeat themselves in the market. So are there any questions about either concept on either chart? Momentum first. Once I have momentum, I'll define the areas. 2 triggers through is weak potential. And then if I have my advantages, I'll go look for an entry. Momentum is down. Price is not even close to clear. Does everybody see? I don't have triggers through 1-to-1s, through fibs, through divergence lows. It's okay to sit on your hands. It's all right to do nothing. It's all right to say my advantage isn't present. And look what happened the last time they reached Fibonacci support. Do you want to be the first one in the pool if you're not sure if there's a gator in it, right? That's kind of all we're doing. Give me a Y, ladies and gentlemen. Pink 1-to-1s for the win. Look what the market did right off of that area. Avoidable losses. Right off of the zone. Avoidable losses. Crude oil, directly into the zone. Smalls get above the large. Pull back to the HVA. Let's see if they want to push up from here. We'll find out in a moment. Some of you may be in a long position based on that termination. Smalls above the large. Pull back to a high volume area. That's your rules met trade, guys. And if you were in at 61.70, you're up about 4 or 5 ticks. Stop is well defined. All right, guys, I'm going to take 2 minutes, go stretch my legs. When I come back, we're going to read the rest of the charts. We are going to look at what you've posted. We're going to talk about what you see, the questions that you have, and everybody moves forward 1 step today. Back in 5. let me put a disclaimer in, because after the first hour, a lot of you are like, holy crap. And this is locked and loaded, guys. Drinking from a fire hose. That's my favorite picture right there. I used to show this every morning. Drinking from a fire hose, guys. Welcome to learning something new. I want you to think back to when you started your career. Everything they told you felt like this, and then you amazingly became an expert in your field. When you started college, when you started high school, when you started middle school, when you got to kindergarten, you were picking your nose and eating paste, guys, but look at you now. So remember that everything is a journey, and the journey starts at the beginning, guys, and you can't have the expectations of being outstanding, of being competent on day one. But, however, if you take it slow, if you learn a couple concepts and then begin to learn to apply them, ask for feedback, get some coaching, use a mentor. That's me. I'm going to sit on the sidelines, and all I'm going to do is say, hey, let's see your chart read. Show me what you saw. Tell me what you were thinking, right? And then let's make sure that you're doing it correct. So I'm going to click on, not a lot of pictures this morning, Paul W. And what Paul said when he dropped this picture in the room was, hey, Mark, do me a favor. Make sure I'm reading my indicators right. So, Paul, we're going to try something. Because we did this on Andy's chart, I'm going to do it on your chart. I'm going to drop this in there. So the small triggers are clearly down, right? And this is a big part of it. Now it's hard to read. I'm going to make it bigger. Small triggers are down, and it reaches a zone. And when it reaches the zone, smalls get above the large, and you buy a pullback to the HVA. So Paul took the HVA trade. And that HVA trade made it all the way up to trouble, right at 62. Do you see that right there, Paul, those pink 1-to-1s? You had 3 ticks to get to that trouble, and the trouble worked, right? Because the triggers are down, because they're down strong. These HVA trades, your entry is perfect. Your management is outstanding. It just didn't have anywhere to run. And that's the only challenge that I can find on this chart. And this is why one of the things that I like to do is, if I'm going to take that HVA trade, Paul, you're in the transition. I want to give it a little room to run. And for me, in my own personal plan, it's a one shot. If it doesn't go the distance, I'm going to stop going counter until I get to the weak side and they start to roll. But everything 100% picture perfect. Nicely done. And I would take a 1-tick loss all day long for the potential of buying the bottom. Wonderful chart, Paul. Nicely done, man. Nicely done. All right, let's see. And guys, if you have questions on the feedback, if you need me to expand, if you need me to talk about it more, just ask. I really like this classroom to be a discussion. One of the great things about where I sit is that I can look at your charts. Victor says, check it out. I don't have the best momentum look. Is no separation. Clear path potential. Entry inside of triggers. Stop loss. That's a huge stop on a medium probability trade without momentum, right? If you took the entry, stop 4 to 5 ticks above. So Victor, this is one of those trades. Oh, so let's go through. Let the language be consistent. But let's do this. you still have a trigger line out. It's not the best momentum, but it's not weak. Does that make sense, Victor? Because that's important when you're hoping that areas break. And what you've done is you've recognized I've been with Nexgen for a little bit. I understand what the strongest trigger look is, but I also understand that as long as one of those lines are out, it's still momentum. It's just not odds favorable. Does that make sense, everybody? Still strong, still 3 triggers through, still a pullback to the area. So what are we working with? We're working with momentum. We're working with the perfect entry. And you are saying potential. If you choose to take this trade, despite the 2 divergences, that's your entry right there. So the stop lesson is with areas and triggers, you can define where the retracement zone is most likely to be if this market's going to continue down. Does that make sense, everybody? You can say it shouldn't go beyond these triggers if this is going to be one of those winners. So your initial stop is about 5 ticks. You give it a little breathing room, right? Not right above, Victor, because they are moving averages, right? I use the number 5 because sometimes what you're going to get is a market, and let's just see if we can find an example. Sometimes you're going to get a market that goes 2 or 3 ticks below, right? It's a moving average. 5 is a magic number. And 5 beyond the triggers is about the most I'm willing to go, because once I get below that, right? Once I get below that 5 ticks, I'm really off in no man's land. Once I'm below 5 ticks, I'm way down here. And do you really want to be in a long trade from the wrong side of everything? Does that make sense on stop placement? Great. I mean, it's a great look. It's the potential to break. 2 divergences tends to mess things up. So if you took it, here's the cool thing about stop placement, Victor, is if you took that trade from 62.04, your stop is like 62.11. It's not a lot of risk on that potential to break. Could you imagine getting in at 62.04 and putting $150 per contract on only the potential to break, as opposed to maybe $70 a contract? So by defining the great entry, what you're doing is you are reducing risk. And because you get in at the top of the pullback, you've got room to make money, even if it doesn't break, even if it does present that third divergence. Nicely done, Victor. But the stop lesson, does that make sense, guys? Where the market should not go. Where the market should not go. Termination, into a termination, retest the triggers, continues down with momentum, 3 triggers through. Taking short trades directly into support, and look at the bounces, but it does go down because of momentum. And then jumping in once it gets below everything, taking it down to support, and just holding, hoping, and then trading directly into support. You're busy, Pete. You're busy here, Pete. So one thing I'm noticing a lot with you guys, because NinjaTrader is resource heavy, I see a lot of you, yeah, it doesn't matter. I see a lot of you taking your fibs off of your large chart, giving you the illusion of a clear path. I mean, 3 winners is great, Pete, right? Congratulations. I love it. Trying to set up for long-term success, guys. Is 2 divergences directly into a termination condition your highest chance of success? Probably not. Pete takes it. Pete has the experience to do it. Guys, I don't want you to focus on the wins or losses initially. I want you to focus on the process that produces them. Because I will say, without hesitation, without any sense of remorse, trading in determination conditions is one of the absolute biggest killers of accounts. And you're going to get lucky every now and then. And you're going to pull one over on the market every now and then. Guys, this is one of the biggest reasons people lose money, is trading into areas that could stop the market. Because 70% of the time, they're going to stop the market. They're going to create a reversal. They're going to create a big untradeable bounce. So I don't mind telling you, you got lucky. I don't mind telling you. And I think if you go back and look historically, and I'm talking to everybody, not just Pete, if you go back and look at it historically, what is my success record? Trading in determination conditions, right? What is my success record when I have weak triggers at a fib, when none of the triggers break through, when none of the triggers break through, when it's only potential, when I don't have momentum, when none of the triggers break through? Do you guys see it? This is a snippet just from today in the S&P. 80% of the time, termination conditions absolutely crushed your trade. Termination, crushed your trade. Termination, crushed your trade. Again, and again, and again, and again. So, guys, do whatever you want. I'm not here to tell you how to trade. But I will go up in arms a little bit. As long as you know what you're up against, rock it out. And guys, that's one of the things about Pete. Pete's been with us for a while. He's got an X next to his name. He's been with Nexgen for 10 years. And his plan is going to look a little different than your plan. His reasoning may be a little different than your reasoning. His ability to read charts rapidly is outstanding. And he can manage a little more aggressively, a little more assertively. Good job. Never breaking up with you, Ron. We are forever. Let me reload real quick, guys, and a lot of times that'll fix the challenge. Give me 1 second. Going to do a quick little reboot on Discord. Education. Coming back to you, ladies and gentlemen. How's that, Ron T? Is that better? Sometimes when I just reboot, it cleans it up for you guys. Is that better? Can you guys hear me? Give me a Y if you can hear me, please. Let me know. We're good? Awesome. All right. Pete again. Quick 10-tick chili dog. Gets below trouble. Rides it down. Gets out before the loss of momentum. But quick management. Based on a maybe. Based on a maybe trade. Nicely done, Pete. Fits what you're looking for perfectly. And guys, I want you to remember that I'm not here to tell you how to trade. I'm not here to tell you what trades to enter or what trades you should or shouldn't take. My job is to teach you to read the indicators, is to help you read the indicators so that you understand the trouble that's in your way. That's it. My job is to help you get to the point to where you can say, it's not perfect. I might have to manage it assertively, or it is perfect. I'm going to hold this one just a little bit longer. And guys, that's all I'm here for. I refuse to tell you how to enter the market. I don't give trading advice. So your winners and your losers, while I always want you to be successful, guys, my job is to focus on the patterns, the process. All right, Paul, let's see what you did, my friend. I can't see where you're coming from here. So you entered at 65, which is right at trouble. Did you go short or long, Paul? I have no idea, Pete. Did you go short or long at 65? It looks like you went short. Is that right? Help me out, Paul, because you cut everything off on this chart. 15-minute transition. Entry, HVA short. I don't see an HVA line. Did something wrong with profit target? 350 became -1, no clue. Paul W., are you with me? I can't tell what you did here. Is 61.65 your exit? Or is... So where did you go long? I don't see an entry. I know you went at 66. CHPR. Chipper? Oh, I see what you did there, Pete. That took me a second. I like that. Paul, do you want to re-snap it for me? Or watch this. We'll just go to crude oil. We'll take a look. 66. So on my chart, I don't have HVAs. Was that your HVA at 71? Or did you get in? It got all messed up with the order. I'm struggling to give feedback. You had the termination without a doubt. And if everything rolled, I just don't see an HVA anywhere at 66. So it's hard for me to give feedback because I can't see what you did. And I apologize. I always want to give feedback, but I have to be able to see the charts. It was a short order around the HVA. All the way up here? Because I'm looking at 65s over here. Do you see how I'm confused? I'm sorry, Paul. I want to be able to give it. All right, let's see. It did get past the trouble. Andy, you're working with one trigger line. Nope, there's your small trigger lines. It breaks. You do have momentum. Let me see. But later back into trouble. Both sets of triggers say up from divergence. I like it. When I am in this attempt to pull back into the trouble zone, what was the problem? Are you trying to go long or short? You tried to go long from 803.50. So you broke above, right? And then it pulls back in. Andy, are you with me here? No worries. So let me show you one of the things about these zones. And with that larger chart, and guys, everybody let me know if this makes sense. So Andy, when you were thinking about the trade, it was up here, right? But when you took the trade, you were back below that ceiling. And I think that was it right there. So your entry is about right there, which is directly into trouble. And you'll see that a lot on TradingView, guys, because it is a bigger chart. This is a good example. See how it gets to the other side of trouble and how the bar, even if we look at in the moment right now, it started to get below. Does everybody see how the most current price is at 65 here? Which means if I take an entry, I'm trading into the zone. If my entry is below the zone, I have a much better chance. Does that make sense, everybody? So while price did get below, we're back into that trouble zone. And I think this is one of the big differences on the 15-minute compared to Renko, Andy. And now just hypothetically, if you sold the market right here, you are below the trouble, right? And the triggers are down. But because the small triggers are against you, you still don't have that close below. And sure enough, it's pushing up. And this zone is doing its job. So you guys will see those tails where they tried and failed, and where they tried and failed. And you'll see them up top as well. You'll see where they try and fail, and how they just can't get below. And you see this a lot, guys. So when you're talking about your entries, make sure that your entries are from the good side of any sort of trouble. I think we saw it on the NASDAQ. Tried and failed, right? Couldn't get below. Is everybody with me? And it takes a little bit. It takes a little bit of time. Look at those pink 1-to-1s. How they tried, and then when they get back below it, absolutely no trades. You're not trading directly into it with momentum, and you're certainly not going to trade against these small triggers that are pushing down. And guys, it's a dance that takes a little time before you stop stepping on toes. So keep doing what you're doing. Keep posting in. And Andy, that was such a great chart, because what it showed was that little phenomenon of where your entries were right into trouble. Good stuff, man. Great picture. Thank you for sharing that. That's where the small chart talked you into some shenanigans. All right, Miss Jen, triggers up, price on the strong side, and you say, I had room to get back to trouble. Close on the correct side of triggers was the white bar at 69. That's where you get in. It shows you getting in there. And you take it all the way up to the thing that could stop the market, Jen. So let's go through and just knock it out real quick. So everybody give me a Y if you're with me. The small triggers are up. Jen is on the strong side of the small triggers, which meant that the most current price was left of those triggers. She wants to go long, but her small triggers turned against her. So she sat on her hands, and she relaxed, and she waited. And then, Jen, the white bar was your first close above the small triggers, and it took you directly to trouble. It's a great trade. You did not enter on the white bar. You were waiting for the 60 seconds to expire. It was hard to see. Yeah, a lot of times, so the bar will print, and then you'll hit buy, and it'll show your entry on the next bar. But because you're strong side of the triggers, Jen, whoops, that's going to happen every trade. Because you're strong side of the triggers, this area is less likely to hold, and you did a great job with that understanding and taking it up to trouble. Really nicely done, Jen. I think TradingView takes about 3 or 4 days to get in sync with it. And once you get in sync with it, it becomes pretty easy, I think. All right, entry above 61.93, above all triggers with trend, good gap between big and small, good reversal from support. All right, Derek, so let's go through everything and just make sure that we're going back to basics, right? We're going to talk about the good and the bad. Where would Jen's best entry be and why? Great question, TV. All right, Derek, I'll be right back to you. So because, and I'm gonna do this in 2 parts. Because of her 15-minute advantages, whoops. Because she had the small triggers up, because she had room to trouble, and because price is left of them, what she's looking for, she's looking for a reason to go long. Does that part make sense, TB? And there's 2 types of entries. As soon as these small triggers turn against you, let me get some of this nonsense off of here. Sorry, I use a lot of arrows. As soon as these small triggers turn against the trade, the rules say Wait for a bar to close on the correct side of them, because what happens is as long as you're below those triggers, the market's probably going to keep pushing down. Once you get the close on the correct side, and that's her close when this bar finishes, she just mashed the buy button. She said, buy now. It shows that she got in on the next bar because that one completed, but that's her best entry, and that's the trend trade entry. It's the one that says, when you're trading with the large chart and those small triggers turn against you, close on the correct side of the triggers. And that's the language that gets you in. And sure enough, this looks exactly like what she did. Don't go, don't go, don't go, okay, go. And because of the large chart, up to the promised land, up to profits. And that's exactly how she did it there. Everything set up, she had room back to those one-to-ones, but she just exercised a little bit of patience, waits for the close on the correct side, and then rides it up to trouble. Does that all make sense, TB? And the cool thing is it's just rinse and repeat. Like, it's the same stuff over and over and over. And when you look at the plan, and Jen did this, oops, wrong one. And this is exactly what she did, is she said, okay, I've read my large chart. Entries come from mid-band, zones, triggers when it gets, so she literally walked through it until she could find the checklist that gave her her best entry, where the two fast triggers cross up. So we're not even worried about them crossing up. It's behind that white bar. What we're concerned with is a bar finishing on the correct side of them. So let's go to TradingView real quick. And okay, so we'll do it right here. If you were looking for the long trade, you can't even see where they cross up. But this was the bar that finished above those triggers. This would be your entry bar. Let's see if we can find one with a smaller bar. Here we go. And I'm just going to make this picture bigger. So right here, you've made the decision that I'm going to go long with the large chart. The large chart is going to be up. The large chart is going to have room to trouble. And now you're going to come to the small chart and you're going to say, all right, where's my entry come from? Well, if you're looking for the trend trade, you're looking for that mid-band area, you're looking for these areas. And what you'll notice is that the small triggers are down and no bar finishes above the triggers. And this bar doesn't finish above the triggers. And this was a down bar, so that actually closed down here. And this was, I'm killing my snagit. Right here is where a bar finishes above those small triggers. Does that make sense, TB? So not yet, be patient, hold tight, almost there. Now the bar closes. Now the bar finishes, and it finishes above those small triggers. And that's where the market heads back up. And we'll find a live example of it. And this won't be the chart that we find it on. All right, so here we go. Let's watch it live real quick. And I'm not saying this is a trade because there's nowhere to go. So the small triggers turned against us. We're not just jumping in. If you were going to wait for a close on the correct side of the small triggers, the most current bar needs to finish above these small triggers. Does that make sense? So each bar is a minute long. This bar still has 20 seconds until it finishes. And look at how it keeps pushing down right off of trouble, right? So we don't just arbitrarily buy an area when these small triggers turn against us. Let me see if I can pull these to the front. There we go. That bar finishes. The small triggers are still down, and I'm still on the wrong side. Absolutely no long trades. So it's just a patience piece, and I've got my timer on. I've got 45 seconds until this bar even finishes. So when we're looking for entries, there's a lot of patience that these minute bars provide. Does that clear it up a little bit? And that's a good example of it, how you're going to be patient and waiting for the trade instead of just jumping into the market hoping that it does what you want it to do. And we can come revisit this and see if it ever happens. And a lot of times, same thing's happening right here. If you were looking for the short trade to go with everything below the areas, you would want a bar that closes below these small triggers. And then once it does, you can see that it does begin to continue down. But we're right at trouble again. So a lot of trouble. Good question. Great question. Keep them coming. Keep them coming. All right, Derek, thank you for your patience. So we're going to go back to your chart, and we're going to rock out the three concepts. And we're going to look for momentum. And that's going to be smalls above the large, which are turning, space between. So, Derek, you even mentioned it on there. Look at the gap between, right? And then the one thing, and it's a little difficult to see on your chart, so I'm going to try and make it bigger. Do you see these one-to-ones? And how none of the triggers have gotten through them yet? So you're actually trading directly into a termination condition. Let me know if that makes sense. Price got to those one-to-ones. None of your trigger lines broke above them yet. You've got one of the small trigger lines. That's it. That's an area that could stop the market. It could create a big untradeable bounce. Path not quite clear. And now you entered. I don't know if you entered on the way down or up. There's an area inside of triggers, and you're catching it. It's heading up, but there's no place for it to run, right, Derek? You don't have any room. So you're fighting against a couple of different things. This is one of those ones. You're going to have to manage it a little more assertively. There's a lot of trouble in the way that could stop the market. I don't know how this ended up for you, but the easier trades, and I can't stress this enough to you guys in the room, the easiest trades that you'll ever take are going to be that momentum and just nothing in the way. And those are the ones that tend to run. Those are the ones that are less likely to bounce right at the area. Those are the ones that aren't trying to break areas that could stop the market. The easiest trades that you'll ever take. Okay, let me address that because I know exactly what you're saying. I know exactly what you're saying. This is a good example. You're saying this could stop the market and this could stop the market, but from my entry right here, I've got room. Is that what you're saying? Because this is super common. Yeah. So the challenge is, and I understand it, and I totally get where you're coming from. If this is a termination condition, what the rules say is no more long trades, right? It's not a matter of having room from where you enter into the area that could stop the market, because if you entered here, you had room back, but it stopped the market. And if you entered right here, you had room back, but it stopped the market. And if you entered up here, you had room back to trouble, but sure enough, it stopped the market. Does that make sense, Derek? And if you took the long trade right here, you did have room back to trouble, but it did reverse the market. So once you have that termination condition, just let it be in play until the trigger lines tell you that it's in the rearview mirror. So this termination condition remains in play until your trigger lines tell you that it's no longer in play. Great picture, Derek. And that's the one that got you. It was a good read. The trend is up, the triggers are up, and you even saw an area inside of triggers. You just had a big brick wall in front of you that could stop the market. And now a little clarity on how they stay termination conditions until the trigger lines tell you that they're no longer. Did that help a little bit, I hope? This is the cool thing about what we do, guys, is every day, you're going to get like a little bit better. Every day, you're going to get a little bit stronger. Every day, things are going to become a little more clear. And it's just that repetition. It's that going back and forth. So, Paul, I think we saw this one. Maybe this is a different one. There's your zone. You get in at the HVA, smalls are above, and then you're out at 63. And what you're seeing here, Paul, is it's just hard to fight these triggers. And the rules are met. The rules are met for the HVA again, Paul. And once again, your execution is flawless on following the rules for the HVA. There's going to be a point where you say, holy shit, nothing seems to be able to stop this market. I'm going to stop going counter. And I like that you're giving them one shot. And the repetition that you're getting in on following the rules is outstanding. And if you try it once per zone, it makes sense, right? It makes sense. And crude oil just has different ideas today, is all we're getting into. Is crude oil is more inclined to go down than up. And these zones, while they're creating bounces, they're not creating reversals. Weak bottom, strong triggers. Try the jump in with momentum, and it doesn't quite work. And then it pulls into the trend trade, and Pete goes, yeah, let's make some money. Let's not lose money. And Pete, I believe you had the gap theory working for you there. That's an awesome shot, especially with the fibs. But that 66 fib, again, I can't say this enough. You're trading directly into it. Guys, just because you pull your synthetics off of the large chart does not mean that they don't exist. So for you Ninja Trader users, let me give you a quick little lesson. On your large chart, your workspace is built with Fibonacci areas from 3 different time frames. There are 5-1 charts, fibs, they're skinny, they don't go all the way to the right. There are 21-3 charts, this is an even higher time frame, they won't go all the way to the right. And then the ones that are native will extend all the way to the right. And these are all on the workspace. Make sure your tick data is checked, Pete, because I want you guys to see something. And this is why they're all important. Please open up editor. Because a 21-3 chart, fib stopped the market. A divergence low stopped the market. A yellow 1-to-1 stopped the market. A 5-1 fib stopped the market. 13-2 fib stopped the market. So guys, your workspaces are built to give you the highest level of accuracy. And if you don't have them on there, you're missing a lot of great information. So Pete, the first thing I would check, right-click on your large chart and go to Data Series and make sure that Tick Replay is checked. By putting Tick Replay on there, that's going to get your synthetics in play. Now, if Tick Replay is checked and you don't have them, you may want to rebuild your chart. It was not checked. There you go. It's just it's good because that's a 5-1 Fibonacci area right there. But Pete, what you were up against, and I can see it on my chart after the fact, is price had reached the mid-band and the large triggers were a full bar away. So your management was awesome on that one. You managed aggressively and avoided a loser. Great job on that. Great job on that. And there's the gap theory coming back and closing it. Awesome management. Trading into a termination condition didn't work out. It's funny how often that happens. And I love from now on you are chipper. Jen, you tried to join the 50K free account. Do you guys hate me? Well, we do. And let's just be clear about that. Absolutely, Jen, we hate you with a passion. Or perhaps our team is working on it. Please try again shortly or contact support if the issue exists. So there's probably something going on real quick, Jen. Maybe it's just it's a momentary update from the programmers or something. Give it a few minutes. Try it again. Right? But if the issue persists, please contact support. That was over the weekend? Okay. So over the weekend, Jen, when the markets are closed, it goes through maintenance. Try it now. And it should work just fine. And let me know how that works. But a lot of times over the weekend, I'll go to check accounts and see how everyone's doing. I can't even see them from my end because over the weekend when the markets are closed, all the different maintenance stuff goes on. But yeah, we do hate you for sure. And it's only because you're cooler than us. It's more of a jealousy thing. All right, this is the RTY. Check it out. There's a termination. It reverses the market. 3 triggers through. Pull back to support inside of triggers. And Paul makes the easy money. Paul, great trade. Everything we talk about. Momentum, at least 3 triggers through. Pull back to the area inside of triggers. Never gets where the market shouldn't go. And sure enough, off to the races. Great job. Great trade, Paul. All right, termination. Can't buy HVA. Small triggers not above the large. Great job following rules, Miss Jen. Great job following rules. Strong side of triggers. The top of trouble is 67, which means that if you took an entry at the close on the correct side of triggers, off it goes. Is that zone an issue? I love this question. All right, Jen. I don't hate you anymore. Now I'm excited because you're bringing a great lesson to the classroom. Guys, when you're thinking management and you're on TradingView, where price is in relation to those triggers, and watch this. If I draw an arrow, Jen is on the strong side. On the strong side of those triggers. So Jen, when you get the pullback and you reach the area, which also happens to be 32 flavors of trouble, and you get the close on the correct side of the triggers right there, you're going to say to yourself, I see this area. I do. But because I'm on the strong side of the triggers, I'm above trouble, I have room to trouble, I'm going to take this trade to trade with the large chart. I'll be aware, and if it spikes down, they can take my money. But the likelihood is that they're going to continue up with everything that the large chart says. Right to trouble. Does that make sense, Jen? So when you talk about what does that 1 minute area mean to me, ask yourself where you are in relationship to those triggers. You're welcome. Great question. What a great question. And guys, you'll be able to manage and you'll be able to make those decisions based on, the likelihood of it holding based on where it is. So 85, 87. And here's another good example of it, Jen. So your large chart trouble was about right here. Do you see it? John, take care. Andy, take care. And being on the strong side of triggers, especially with momentum, do you see how it stuttered for a second, but ultimately it breaks? There's another good example. That one never had a chance. This one, because of price, location, everything going up, you do get a little bit of a stutter. And this is one of those times you were wondering about stop placement. My initial stop goes here, right? For me personally, when I get to this zone, I definitely don't have risk on it. I'm going to hide behind this area. And then when it breaks above that area, I might go a few ticks below it. And then when I get to this area, just pump the brakes and get paid. Great job, Jen. Good question. If the rules are met, I'd love to. Let's take a trade. Let's see if there's a trade. We just missed the momentum trade there. I don't have anywhere to go up with my small triggers here. That sounds great, Mr. Paul. It's good to have you in here. Well, okay, so no rules, Jen. If John fires me, you're in trouble. Everything says up, allegedly. I'm waiting for a close on the correct side of the triggers if I'm going to go up with it. I can't because there's nowhere to go and the market is behaving accordingly. So if I were waiting for a close on the correct side of the triggers, and I don't think we're ever going to get it because it's termination central, right? So let's see if crude gives us one. Small triggers are up. Strong side of the small triggers. That was your momentum trade. And now the small triggers have turned against you, Jen. So when my small triggers turn against me, my thought instantly is I want to see what happens here. I want to see what happens here. I also, and this is probably my favorite look, HVA, one-to-ones, mid-band zone. So because this is up, because it's strong side, I'm looking for a pullback. Notice that I have pink one-to-ones right here, Jen, at 62 flat. And guys, tell me if you see it. Help me out here. That green dotted line represents those pink one-to-ones. So this goes back to the lesson that Andy gave us. The triggers are up. We're on the strong side of the triggers. If I get a pullback to this zone, above those one-to-ones and a close on the correct side of the triggers, I can try and ride that market up. Okay, so Jen, you say you see me pressing the buy button. So when am I going to press the buy button? We can do this without having to take a trade. You ready? When am I pressing the buy button? When I need a close on the correct side of the triggers. And Jen, I will literally sit with my mouse over the buy button. I just pointed at my screen. You probably couldn't see that. And I'm waiting for the market first to get to an area. And they're trying. And then when they get to that area, Jen, my finger is right here. Because I have to wait for a close on the correct side of the triggers. Let me get my timer on real quick. The Physical act of where you're buying, have you predefined your risk and reward? Okay, so I don't. I don't have my stops and targets in place yet because if I did that, what I would have to do is I would have to do this right here. And I would have to get stops and targets in place, but I'm not using a limit order. So let's say we go long, right, Jen? I'll put my stop loss below the zone where the market shouldn't go. I'll put my profit target where the market should go. So it takes about a half a second. Still haven't gotten the close above, so that's what I'll do. So we'll wait a second, and we'll see if we get that close above right from the zone, right? But you notice how we didn't? And look what the market's doing. And I can't stress this enough. If you try to anticipate your close, that's 1, 2, 3 times. It didn't actually give you a close on the correct side. Now we're getting into the areas, now we're getting into the zones, but I've got 47 seconds left on that bar. So once I enter, Jen, and I'm already thinking about it, if I get an entry from this zone, where do I want my stop to be? Somewhere down here below that zone, right? Because this is the area that I'm expecting to create a bounce to give me continuation with what I see on the large chart. So if it gets below here, I don't want to be in the trade anymore. Does that make sense? But until I get a bar that finishes above these small triggers, we've got 11 seconds, 10 seconds, 9 seconds, 7, 5, 4, 3, 2, 1. Damn it, it didn't happen. And sure enough, it finished even lower. And it starts back over. Does this make sense, TradingView people? We literally called our shot. We know where we want the market to get, and now we're just waiting. I don't want to fight these small triggers. I don't want to go against that immediate momentum. I want to have price on the other side of this indicator. So we're just going to keep waiting. We're going to see if it sets up. Strong side of the triggers. I'm above trouble. I have room to trouble. I just need my small chart to give me an entry. And I have 19 seconds, 18, 17, 16, until I know whether or not that's going to close on the correct side. So TB50, kind of a little live example of what you were asking earlier. 2 seconds, 1 second, boom, mash the buy button. It slipped me a little bit. So now, instead of below the zone, I can put my stop. I'll go like a couple ticks below the bar that gets me in, or you can go a couple ticks below the zone that you expect to hold. Where are we expecting this market to go? Maybe up to the mid-band. And look, it doesn't always work, does it? They did make it to the zone, but my stop is 2 ticks below it. We'll see if the zone holds. Anywhere above those 2 lines, yep. The challenge is that I didn't let it reach the actual zone, so we'll see if stop, where the market shouldn't go, pays dividends for us. But this is just an entry rule. This is like how you're going to time your entries. And one of the things in this classroom, guys, you'll notice that I'm on paper trading. I'm on sim. So everything that I do isn't necessarily following the rules 100%. Everything that I do is done for educational purposes. We'll see if we can get a lesson about areas holding, right? We'll see what happens. They still haven't gone below the zone couple ticks. So if you didn't take this one, let's see if that bar closes above. Do we add to our position? Does the stop placement make sense, everybody? The zone is what we're expecting it to hold, is what we're expecting to hold. Couple ticks below it, right? No, I am 100% live, Todd. That was That was 3 ticks above the smalls. So when you talk about the peak over, TB, what you're probably referring to is when price just barely peaks below a zone, right? Because your entry is probably going to be back into that zone. But a close on the correct side is that rules met trade. We're still in. It didn't work. But that fit the rules. When your rules say pull back to an area, close on the correct side, that bar would qualify. And now we're right back to the one-to-ones. And I can't take an entry from below those one-to-ones. That's kind of my line in the sand for long trades. Does that make sense? I think the peak over is when you're trying to break through an area and you're waiting for the pullback, and it's probably this right here. So let's say hypothetically you were looking for the momentum trade. Do you see how price just kind of peaks over? What you're looking for on that trade is for it to go up and then pull back, rather than just peak above a zone and jump into the market. So your momentum trade look, instead of jumping in right here or just right here, it's letting it break because the pattern is that it typically pulls back. So if you just jump in on the peak, you're more likely to sit through all of the pain of it coming back and retesting the zone to give you the rules-based entry. Does that make sense? I think that's probably what it was referring to, is when you're trying to get to the other sides of zones. And now there's your, if you had to take the second shot, that would be a close above. It's above trouble. It's strong side of small triggers. And that happens sometimes, right? Stop below the low pivot. But it's just a pattern. It's just a pattern that you're looking for, and it's based on the large chart advantages. But that was an exercise in what it's going to look like at the entry, not necessarily that that's your best look ever. So did not follow my rules, but was impatient. Small triggers are between large triggers, bouncing between the trouble, not a good look. You tried to buy a pullback at the green fib, at the HVA. Never really made it though, right? To go long the yellow one-to-ones, it bounced around and completely took me out. So if we look at your chart, K-price, your small triggers have turned against you. Do you see it? And your large are down and your smalls are below. So if you went with the very basic concept that if my small triggers are down, the only direction I'm going to look for is shorts, it keeps you from thinking about the long here. And this bar closed below the small triggers. And this bar closed below the small triggers. And this bar closed inside of the large and small triggers. And this was your first bar that was above the small triggers. But because this chart didn't say it, it ended up going down. Does that all make sense? They rolled against you. And you're below trouble, and you're right at trouble. And this is just that patience piece. I love that you did it and that you talked about it. They didn't roll yet? Okay. So you were in at 70? 65, 70. You just watch it live. So when they start to roll, check it out, guys. It is working now because it actually made the zones. You'll watch your smalls, but when, let me see if I can find one that's in that transition period. And well, this is it right here. And that's probably the look you had where they're flat. So flat triggers aren't pushing one way or the other. And that's where you really were with yours, is they weren't really pointing up and they weren't really pointing down, which means you didn't really have the momentum, right? You didn't have any room to go short. And do you see the VWAP? The VWAP's a new indicator for most of us. This white line, this is the volume weighted average price, VWAP. It's fun to say. This thing is like liquid death, guys. Trading directly into a VWAP will ruin your good time very often. So you just didn't have anywhere to go below. You didn't have anywhere to go above. And this is one of those times, just like you said on your chart, it's better just to be patient. And it's hard to go long to one-to-ones that are on the other side of a zone with your large triggers down, not from a close even on the right side of the small triggers. That was just the I hope I can make something happen trade, and it didn't work out, which is an outstanding lesson. It's an outstanding lesson. All right, Victor. Strong, 3 triggers through, no divergence, perfect entry. My VWAP is in position, target acquired, waiting for instruction. Pretty much. Separation is always strength. You have momentum. Clear path potential. Stop loss where the market shouldn't go. I like it. How'd it turn out, Victor? I believe this is you making money right now. Nice trade. Nice trade. Momentum, potential to break, clearly defined entry. First target at 62.19, which is trouble. I had 62.12. I also have 62.20. So I'm rooting for you with all that momentum. Giddy up. Pay him. Pay the man. Nicely done. So guys, if you're new in here, everything starts on the big chart. If the big chart says up, if the big chart is on the strong side, and then TB, do you see it? This is your first, and we were showing Jen what it looks like, and all you guys what it looks like. Move over. That was your first close above the area. And this zone wasn't there. It didn't make the actual zone. And it actually pushes lower. And then this was your second close above when it actually reached something solid to bounce from. And that's the one that pushed the market up. Does that make sense, everybody? So there's 2 parts to entries. The first one is it pulls back to the area. The second one is that it closes on the correct side. And when we were talking about how to time the close on the correct side, we didn't have an area yet on the small chart. It hadn't made it. Did we take a picture of it? Because these areas come back together. See how it didn't quite make the area yet? It wanted to, it tried to, it was getting close. That's just the buyers testing the water and the sellers pushing you right back down to the key number, and then it closes on the correct side. So I think we lost TB. He probably said, oh man, he took a trade that didn't win. Nexgen is nonsense. When it actually makes the zone and closes above, guys, stop behind the pivot. Off it goes. Beautiful trend trade. Does that make sense? Directly into trouble. If you're on NinjaTrader, you knew exactly where trouble was. You can even look at the 2, right? You can look at the 2. You can put them together and say, wow, Dynamic Rinko says up but trouble. 1 minute says up but trouble. What a great management opportunity if you needed a reason to manage. All right, guys, I'm going to take a few minutes and go stretch my legs. We've made it through all the pictures, so do me a favor. If you have a question, post it. If you have a picture, post it. If you have anything, post it. Sorry, Pete. Will you repost it for me? You'll be the first one that I look at when we come back. I bet Pete went long somewhere about here with momentum and path and made all the money up to trouble. I'm just going to see if I can call your shots, Pete. But I'll be back in 3 or 4 minutes, guys, and we'll finish the classroom. Please ask a lot of questions. Let me know what I can help with. Understand that you're under no obligation to be good at this on day one or even to understand the terminology on day one. But every day through repetition, it gets easier. I'll be back in a few. Mad at you. Thanks for coming in and saving the day. I had to delete everything that she said about you. It was rough for a minute there. Save the day. John wears the Superman cape. Guys, I guess price reaching 62.20 and none of the trigger lines breaking, that was a pretty good target, wouldn't you agree? Victor, I think you had it at 19. That's pretty solid, I'd say. You'll notice that the small triggers work their way back inside. Divergence printed. Pretty outstanding. All right, Pete, let's see what's going on. Ha! I was right. Nope, your entry was early, though. I was almost right. So let's see. Price hits a mid-band, closes the gap all the way back to the triggers. Pete says, all right, there's my reaction. And now we're going back up with momentum and the potential to break. And I'm not sure what the entry is. The entry doesn't make sense to me, but that's okay. Here where it pulls back to the one-to-ones and the small triggers right behind your annotations was going to be a little higher probability entry, but absolutely beautiful. And you let it react, and then when the reaction said, we're going up, you just went up with it. Great job, Pete. Nicely done. All right, Miss Jen. Good side of triggers, above trouble, room to trouble, close on the correct side of the triggers, and you're in. Where are your stop losses and targets, Jim? Are you trading Tradeovate? It's weird that they're not even showing. Wow. So it works? Jen, you're saying it works. Pull back to the area. Wait for the close on the correct side. Ride the momentum up to trouble. You're protecting yourself there. You're saying no matter what happens, I'm 30 bucks in the good. If that decides to hold, I can't lose money. Nice job, Jen. And guys, I was thinking about this on my break. So no matter where in the world you are, right? If you play baseball, you don't expect the ball to head to the outfield until it hits the bat, right? If you play cricket, you don't expect the ball to head out into the playing field until it hits the bat. If you play soccer or football, you don't expect that round ball to head the other direction until it hits the foot. That's why, if you're waiting for the pullback, let it get to an area. Let it get to a zone. Let it to get to something solid to create that retracement. Because if it doesn't, it's just a little fluctuation. And that's what we saw on the example, Jen, of how to get in. It hadn't reached the zone yet. That red zone wasn't there. It was hovering above. Does that make sense, everybody? That's a big part of it. Let it get back to something solid and then get in on the business side. And Jen, that was a great trade. Miss Claire, you asked about rolling contracts, right? I apologize. Has the contracts rolled? How do you know? I believe TradingView rolls them automatically. I really do, because I don't think I've rolled my TradingView contracts. One thing you can do, Claire, is click on watch list. And this is what I did just to be sure. So this says I'm 925. Whoops, and I just went back to 925. Whoops. So what I'll do is I'll add, and I'll go to futures, and I'll go CL, crude oil futures, and I'll just put it in my list. So this is real-time market open, and that's where the market is trading. And that was last month, so I had to close that one. So I didn't actually roll. It rolled for me. But you'll be able to do that, Claire. Go to your watch list, go to add, and make sure that you're on the most current. And it'll put you on the most current one. Does that help, Claire? Does that make sense? And then Jen, mid-band is an area. Couple it with a bunch of nonsensical things here. Looks like a pretty good exit, doesn't it? Nicely done, guys. Sure. All right. Small triggers are down. Do you agree, Miss Price? Cool. So if I draw my line from the bottom of those small triggers that are down, the most current price is on the strong side. They're left of the triggers. So far, so good? What's my third question? Is there anything in the way to ruin my good time? Do you see that big zone right there? That would be the something in the way to ruin my good time. So what does that mean? For me, it means I don't care about that small chart until I get below trouble or until everything rolls and heads up. Does that make sense? And now we're starting to get below it. Oh, ho, ho, ho. And we broke below. Oh, but we're back up into it. So if I take an entry, I want it to be below 63.75. I want an entry to be on the business side of that zone. Does that make sense, everybody? They peeked their heads, but they did there too. And they tried here too. And there, right? So they're peeking. Do I want to take a trade directly into the bottom of the zone? My answer is no. Which means I need things to work their way down just a little bit so I can have the advantage of a clear path. Does that make sense? That's my current read. So for me, you could do this too. I love using a line. Watch this. If I'm going to take a short trade, I want my entry to be below that green dotted line, the bottom. And if it keeps bouncing back up, I'm not a huge fan. Not a huge fan. I would be taking a risk. I would be taking a trade from directly into trouble. And just be patient. You guys ever sit in a doctor's office for 10 minutes waiting for your appointment and it feels like 10 hours? That's how trading is, guys. You're going to sit still for 10 minutes and it's going to feel like the whole day. It's going to feel like there's no chance of making money, that you're never going to get paid no matter what you're doing. It just doesn't set up. But it does. Sometimes it takes a little bit. I just reload, Claire. I do this every now and then, and I don't know what I do to make it happen. I really don't. So anytime that happens, what I'll do, and I'll go back to basic. Anytime I put like another layer in, and I'm telling you, I have no idea how I do it or why it happens. I'll just go back and I'll click on ES Futures and I'll copy it and I'll save it and I'll go back to my trading view and I'll just drop that new saved copy right in there and it'll reset everything. and it brings me back to good. Oops, that's not it. I was going to see if I could just copy it for you and put it over so that you didn't have to chase it. There you go, Miss Claire. You can click on that one. It'll open up in your browser, and then just save it, and you'll be good to go. Miss K. Price, that worked out, didn't it? I don't know if it's going to go down or up, but I feel like not taking that short trade just kept me out of a loser. That's that patience piece. That was pretty cool, though. Thank you for asking for that read, because I think that turned into a great lesson. Look what the market's doing. Pretty awesome, right? And I know it's frustrating when you don't get your entry, and I know that it's just a pain in the butt when it doesn't give you what you're so ready for to have happen. But sometimes it's better to do nothing. Sometimes not giving money away is a better choice than hoping that an area breaks. Pretty cool, right? Than hoping that that termination isn't really a termination, or that those weak triggers will push a market lower, or that those weak triggers would have pushed the market higher, or that potential to break with divergence on it wouldn't push the market lower. And guys, it's just the lessons. And I can't stress this enough. RK and Derek and you guys that are new, I'm never trying to keep you from exiting, and I'm never trying to keep you from entering, and I'm never trying to force your hand one way or another. But I'm telling you, if you take a little bit of time to learn those very basic concepts, this is a market that can't figure out which way it wants to break. And sure enough, there was a lot of avoidable losers in there. And then when you get a little more experience, you'll start finding the opportunities inside of the problems, if you will. That's one of the things that my brother is so good at. If you've ever watched his posts in a room, he can take a trade, and instead of saying, you know what, I'm not going to trade into that pink line, he'll say, I'll take the perfect entry, I'll make money up to the pink line, and I'll protect my investment once I retest the momentum because of all the trouble. And he'll start to see the moves within the moves, and it's inspiring to watch John Novak trade a market. And it really shows you what is capable once you start to really get in tune with what you're seeing. So it's fun. Ah, you broke your hand? Claire. Did you not warn him not to talk back first? Like, warning shot across the bow. I hope you feel better. I've broken a hand. It's not a lot of fun. You realize how fish out of water you are when you lose your dominant hand. And at the risk of being crass, I apologize. You realize it the most the first time you go to the restroom. I do want to show you something pretty cool. So this is John's automated system that we've been working on forever. And this has been a market today that's been pushing a lot of can't break it, not quite there, isn't perfect, doesn't have the pullback. I've been there, Claire. And guys, I want you to see something pretty awesome. So this automated system is the absolute best of the best. Odds favorable, clear path. And you could work it with a little bit of discretion as well. That's the last signal at 6:05 a.m. that it produced with the rules met. And there's a lot of maybe trades in there, right? But the system, and I think this is pretty cool. Look at the termination. The system is a brainchild, if you will, of some very simple concepts, guys. The system is momentum, path, and entry. And I think it started maybe on a bet. Could we automate the perfect trade? Could we automate the perfect entry? Could we give people the opportunity to not have to learn it so much, but let a system tell you when it's perfect, and then jump in and let the other 10% be you using a little bit of discretion? So that's something that's in the works and coming, guys. Weakness, not quite a clear path. We'll see what happens. Guys, what do you want to talk about? Termination for the win. Weak triggers. What did it look like, weak triggers? You guys want a good lesson here? NinjaTrader users, you want one of the greatest lessons I can give you? I normally charge a nickel for this one, but I'm going to give it away for free. This is why stops are 4 to 5 ticks beyond the trigger lines. Because if you enter, and you enter without momentum, but if you enter at the area inside of triggers, this is where the advantage is gone, guys. And once you get to the wrong side of the triggers that far, there is no telling if, when, or where that market is going to stop. It's not AI, Z-Robot. It is coded rules. It is not AI. Okay. I'll tell you what, though. I have been absolutely in love with AI lately. I've been learning a lot more about it. It's cool. You guys that are really good at it are pretty outstanding. There's some neat stuff going on in the world. There really, really is. Really is some cool stuff going on. So, all right, guys, it's your classroom now. You tell me what you want to talk about. You tell me what you need help with. You tell me what's going to make your life easier. What's going to make it better. So many more fibs with that T. Yeah, but momentum's good. Potential to break, Pete. Pull back to the area inside of triggers. Get paid up to trouble. It's the same thing, right, Pete? 2 triggers above. Perfect entry. Stops make sense. 1 off at trouble. 1 into trouble. I mean, rock star, dude. 2 triggers through was the reason. It was good. Rinse and repeat all day. All right, Ollie. So we had a weak bottom. I'm comfortable with that. You had odds favorable. I love it. You had 3 out of 4 triggers through. I don't know that it was 4 at the time of entry. There's your first potential entry, right at the area inside of triggers, and then it pushes up, and it says, holy smokes, we forgot Ollie, and comes right back to the area inside of triggers, doesn't make it 5 ticks below, and both targets hit. Outstanding trading. If you are brand new with me and you're wondering if the software works, I hope you're not wondering anymore. I hope you have absolutely no doubts that what we teach on a daily basis is effective. Now, here's the kicker. If you can't do what Ollie did yet, if you can't see it like Pete saw it yet, if Victor, where's your darn picture? Missed it, right? Or even if you can't wait for the close on the correct side like Jen did, that's okay. It's okay to be new, guys, and it's all right to not get it in the beginning. my promise every day is that I will give you everything you need to be successful with the software. And we did that. We talked about the rules, where to find them, what they look like, what they mean to you. Everybody has the ability to get feedback. The only people that don't get feedback in my room are the people that don't ask for feedback in my room. That is my only rule, is I won't solicit you. I won't say, Sammy, I notice you've been doing nothing in the room. Maybe you're trading outside of it. Maybe you just like to listen. I'm not going to force you to have a conversation with me. So, guys, post in the room. And then just learn the looks. Learn the patterns. It's not a mistake that Pete's pattern is the same as Ollie's pattern. Is the exact same, hold on, as Victor's pattern. Which looks, that's not the pattern. There's more than one trade. Uh-oh. But it looks exactly like Paul's pattern. So it's just a pattern. And that is like West Coast, East Coast. I don't know where you are, Victor. Maybe you're in the Midwest. But the patterns work no matter what time zone you're in. The patterns work whether you're in America or whether you're in Europe. Or if you're in Europe from Australia, you're in Atlanta, right on. That's right, we had that talk. I apologize. Lawrenceville? So if you can't pull these trades off yet, that's okay. You will, with a little bit of study, with a little bit of practice, with a little bit of feedback. You'll get exactly where you want to be. And now they're starting down, and now they're getting below. All right, K price, let's do the ES read again. Smalls are still down. We're still the strong side of the smalls, which means with strong triggers, if it pulls back to this zone, that's my sell. My stop loss will go on the other side of the zone. My profit targets will come down somewhere around my big chart. Does this make sense, everybody? Strong side of down triggers. I'm below trouble. And if I get a pullback to a zone with strong triggers, I'll see if I can write it down. But Mark, what about that zone? From the good side of those triggers, it doesn't faze me so much. Now, if my small triggers turn against me, which they appear to be doing, I have to rethink, because I don't want to fight the small triggers. What would we like to talk about, ladies and gentlemen? Small triggers are dual regardless if you want to reach that target, right? They might. They don't always. Let's find an example. They don't always. Here's a good example. See how they stayed strong? That was your entry, and then they come down. So they may threaten. They may threaten, but if they don't actually roll and open and come against you, meaning of life is different for everybody. That's my thought on it. Good morning, Elvis. Nice to see you. They're trying, right? Look at the zone that they were caught in. Look at the range. And we can define clearly where they need to get below to continue down, right? It's a line in the sand, guys. 100%. That's a line in the sand, and you see it. And you've seen where they have tried and failed over and over and over. And you can see where they tried and failed over and over and over, and how they couldn't get up any higher, right? And now they're trying to push lower. And now we're just waiting. It'll come. I can't remember a day when I didn't get a trade. I can't remember a day when I didn't get something from that checklist that worked itself out. It's just not a lot of fun to wait sometimes, right? It's not a lot of fun to sit on your hands and do nothing. Get a coloring book. Play video poker. Read a book. Text your spouse. Tell them you think they're neato. Anything other than just jump into the market, right? I said neato, David. I said neato. I stand behind it too. My wife is neato. You ever meet her? All right, guys. I'm gonna mute. I'm gonna let